This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Down, down, down. Stocks fell sharply today. There are real concerns about the consumer and about corporate America. Has something changed in the economy? And what does it mean for your money?
Wal-Mart warns the world's largest retailer says shoppers aren't shopping, spenders aren't spending, and profits won't be what was predicted. What do Wal-Mart's woes say about the broader economy?
And the housing disconnect. Home builders are more optimistic than they've been in 8 years. So why have their stocks fallen so much until today? We'll have all that and more tonight on Nightly Business Report for this Thursday, August 15th.
Good evening, everyone, and welcome. That drip, drip, drip of sliding stock prices turned into something more today, something more like a torrent. U.S. shares fell the most since June, albeit on light volume, as investors digested troublesome forecasts from bellwethers Cisco and Wal-Mart. They also seem to conclude that favorable news about unemployment claims means the Federal Reserve will reduce stimulus sooner rather than later. The Dow now sits 546 points, or 3.5%, below its all-time high hit on August 2. The S&P 500 is 48 points, or 2.8% below its peak, also set that day. Now, today's sell-off accounts for about half of those declines from the all-time highs. The Dow down 225 points, the Nasdaq lost 63, and the S&P 500 lower by 24. But it wasn't just stocks that fell today. Bond prices tumbled too, largely on those Fed fears. The yield on the 10-year U.S. Treasury bond jumped to 2.77%, its highest in 2 years. Also moving up today were gold prices. They spiked more than 2%, settling above $1,360 an ounce as the dollar fell against the euro and the yen.
As Tyler just mentioned, the news from Wal-Mart today gave investors the jitters. Its earnings missed analyst estimates, and it lowered its outlook for the rest of the year. But what was most troubling, the world's largest retailer said consumer spending isn't as strong as we thought. American consumers are turning cautious. That grim assessment about the consumer mood added to worries about similar earnings report from Macy's yesterday. Courtney Reagan has more.
It doesn't get much bigger than Walmart. When the world's largest retailer says consumers in the U.S. and around the globe are spending more cautiously, the market pays attention. And the bigger concern is that the discount retailer doesn't see it abating anytime soon. Walmart's second quarter profit comes in line with Wall Street's expectations, but a shortfall in sales. The discount retailer also slashing full-year forecasts for both earnings and sales. Traffic and sales at stores open at least a year fell compared to last year, though the company says both improved throughout the quarter. Walmart executives blaming mostly the 2% payroll tax hike that hit most Americans earlier this year for the reluctance to spend.
I think you're kind of seeing a bit of a split economy right now where that lower income consumer has been under a lot of pressure. That mid to higher end, certainly the higher end, maybe not middle, but the higher end is doing okay.
On a media call, Walmart CFO said early indications for back to school and apparel and home goods seem to be really good, encouraging. Then tempered excitement by adding it's too early to give a read overall. Still, a number of analysts say it depends on the product category and brand, noting consumers are spending on bigger ticket goods like cars and home furnishings, though trading down on smaller purchases.
The consumer has more capacity to spend today than the consumer had a year ago. They're spending it more selectively.
Even something as simple as diapers, not necessarily buying the branded diaper, buying the more basic staple one, maybe using some of that savings to buy something else.
While this round of retail earnings reflect a consumer feeling the pinch from higher payroll taxes, a number of economists believe consumers have already begun to get over it and think spending has begun to pick up. Retailers certainly hope that's true. After all, Christmas is just 131 days away. For Nightly Business Report, I'm Courtney Reagan.
Well, shares of the nation's biggest home builders bucked the market slide today. Some of the best-known builders, Pulte, D.R. Horton, Lennar, and KB Homes, all spiked more than 5% higher on a jump in builder sentiment and a sharp drop in foreclosures in July. But that's today. Those same stocks are currently in bear market territory, off 20% or more from their peaks. Now, with mortgage rates creeping higher and consumers possibly turning cautious, there's concern that those home builder stocks, which had been on fire even before the housing recovery really took root, may have been overbought. Diana Olick has our story.
The nation's home builders are feeling good about their business, but you would never know it from their stocks. Officially in a bear market, home builder stocks are down over 20% from their highs in May. Big names like D.R. Horton now at a one-year low, and Pulte being downgraded by RBC. Blame it on rising interest rates.
We're absolutely concerned about the rise in interest rates. The Fed's actions to decide to taper in October will probably make things worse, not better.
Rising rates are not taking much out of builder sentiment, which is up 3 points on the NAHB's monthly index for August. That's the fourth straight month of gains. Builder confidence now at an 8-year high. Of the three index components, current sales and future sales expectations are both up. Only buyer traffic is lagging, unchanged and still in negative territory. So why the disconnect between the builders and their stocks?
These were companies that were literally on the ropes 3 years ago, 4 years ago. Now they're back in the clover. They've made some remarkable strides in a short period of time, but relative to investor expectations and what people believe the earnings power of these companies, they're paying less for the same dollar of earnings based on what they believe is going to transpire in the back part of the year.
Builders say their confidence is getting a boost from the very limited supply of homes for sale.
There's generally a shortage of product in this vicinity around here, so people want to move in, but they don't have anything to buy, and the existing product is not there. So we're trying to build new for them, and it's getting very good. I mean, all of a sudden the houses are moving up in price, and then you're getting enough in there interest to buy.
Much of the builder confidence revolves around the lots they've bought and both permits and starts, because that's their future pay. But as one analyst notes, just because they build it doesn't necessarily mean the buyers will come. For Nightly Business Report, I'm Diana Olick in Washington.
So what do all these bulletins from housing, the consumer, and the job market mean for stocks? We turn to Jim Paulson for his thoughts. He's the Chief Investment Officer at Wells Capital Management. Hi, Jim. Nice to have you.
Good to see you, Susie.
A lot of negativity today in the markets. What's your take on today's market action?
Well, you know, I think a lot of it, Susie, is we're digesting a number of big things after a huge market move. Well, that's one of the things we're sort of digesting is we've made such a big move off last fall lows in the stock market overall. We got much higher valuations than we used to have, and we're kind of giving us investors a pause for a moment. In addition, we've had just a dramatic change in long-term interest rates. You're talking about mortgage rates going up, the 10-year Treasury almost hitting 280 today. It was 160 not that long ago. And then, of course, we're going to face Fed starting to taper or to slow down quantitative easing here very soon. These are big events, and I think it's led to a little market indigestion, if you will. I think that may continue. I think the market's in a trading range for the rest of this year, but I also think we're going to get through it. And as we come out the other end, maybe at the end of this year, I think we're going to be stronger for it. We're going to find out that both the economy and the stock market can stand on its own 2 feet without as much support from the Fed, and even in the face of higher yields. And that might put up greater confidence to drive us higher next year.
So trading range for the rest of this year, which implies, I guess, that you think perhaps the year's highs have been hit, or maybe we'll go back and go a little bit above them. But let me ask you this. The news that we are digesting today, on the one hand, Cisco's report and forecast last night, on the other, Wal-Mart today, suggests that there may be some underlying issues having to do with capital spending, the appetite of businesses to buy equipment, and on the other hand, the appetite of consumers to spend. Are you worried about consumers? Are you worried about business spending?
You know, Tyler, I'm not too worried about it. I get some of those companies' reports. I think Cisco particularly reflects weakness coming out of the emerging world, particularly Asia, which is very obvious with the emerging world that slowed down. I see that with global trends. But I think I'm looking at a consumer that's looking at the best job market we've had in this entire recovery. We've created over 200,000 jobs a month this year on average. Unemployment claims today just fell to their lowest levels since before the recession occurred in 2007. Net worths are back to record highs. Debt service burdens are back to record lows. Confidence are at their highest or very close to their highest levels among consumers of this recovery. I think they're going to be okay. Do they ebb and flow somewhat? Absolutely. Are they probably spending a little more on houses and autos and thereby a little less on other things right now? I think that's true. But I think the trends are in place to continue to have a sustainable consumer going forward. I'm not that concerned about it.
Jim, let me ask you something, pick up the comment that was made in Courtney's package about Walmart, where a gentleman was talking about that we are in a split economy. Just what you were saying. You know, one area is doing well, housing, auto sales, and then you hear on the other end maybe some consumer buying, some tech spending not doing as well. Are we in this two-tiered economy? Because everybody always talks about the U.S. economy is doing well or U.S. economy is not doing well. Are there really two economies going on here?
I think there's some of that. I really do, Susie. I think that it's not necessarily totally uncommon either. As you come out of a recession, and this is a bad one, and in some ways we're still coming out of it, you come out typically with the lower income groups coming out last. And I think we've seen that in this recovery as well, where the upper income groups and now maybe more of the middle income is starting to do better, but you still got a big section of the lower income group that's doing bad. You know, we still have a 7.5%, close to 7.5% unemployment rate. A lot of that's still centered in the lower income group parts of the economy. So I do think you see that. So the discounted areas, I think, might be suffering more than the higher quality or higher end retailers at this point.
All right, Jim, thanks a lot. Jim Paulson, Chief Investment Officer at Wells Capital Management.
Well, this week's police crackdown on protesters in Egypt has left hundreds dead and more than 4,000 injured, most of them supporters of the ousted Islamist President Mohamed Morsi. President Obama interrupted his family vacation in Martha's Vineyard, Massachusetts, to condemn the slaughter of Egyptian civilians and cancel plans for some upcoming military exercises with the Egyptian army, which Washington helps fund to the tune of more than $1 billion in annual aid.
Our traditional cooperation cannot continue as usual when civilians are being killed in the streets and rights are being rolled back. As a result, this morning we notified the Egyptian government that we are canceling our biannual joint military exercise, which was scheduled for next month.
With more on the latest in Egypt, Youssef Gamal Eldin reports from Cairo.
Sporadic clashes are still taking place across Egypt between supporters of ousted President Mohamed Morsi and security forces. The latest attack on a military checkpoint that's killed at least 7 soldiers. And also the Muslim Brotherhood making it clear that this is just the beginning. They will not cower and, quote, will rise again. They are planning a 1 million-man march for Friday. Security forces on their side are not taking any chances. They've been authorized to use deadly force if necessary. A curfew is in effect. The traffic is dying down in the background, and the state of emergency is still on as well. Keep in mind that we had comments from U.S. President Barack Obama. He strongly condemned what is happening in Egypt, but also said that it was for Egyptians to decide what would happen in the future. I'm Youssef Gamal for Nightly Business Report in Cairo.
Meantime, the deepening unrest in Egypt, combined with the civil war in Syria, has been sending the price of crude oil higher, fueling worries about a squeeze on supplies coming out of the Middle East through Egypt's Suez Canal. Today, oil prices rose another 48 cents a barrel to close at $107.33. That's around a 5-week high.
Still ahead on the program, Twitter has become the news feed to the world. Financial power players use it and move stocks. But what about the risks of hacking and even the slip of the thumb? Is Twitter raising the amount of risk in the marketplace? But first, let's get a look at the biggest drags on the Dow today. We begin tonight's market focus with a late-day earnings report from Nordstrom. The upscale retailer missed revenue estimates and trimmed its earnings and sales forecast for the year as its sales at its department store slipped. This makes it the latest retailer to cut its outlook. Shares finished the day slightly lower to $59.33 and fell further in after-hours trading. Dell out with better-than-expected earnings and revenue after the bell. The company that's embroiled in a takeover battle between founder Michael Dell and activist investor Carl Icahn beat analyst estimates, and that's despite shrinking sales of PCs. But Dell shares closed down a fraction to $13.70. Kohl's was one of the few bright spots in today's market, the retailer benefiting from exclusive and private label brands like Jennifer Lopez and Rock and Republic. And while some retailers have struggled with back to school, Kohl's says sales of kids, juniors, and footwear are off to a good start. The company met street expectations, and investors brushed off its cautious outlook for the year. The stock gained more than 5% to close at $53.51.
And Kohl's wasn't the only consumer-related stock in the green today. Estee Lauder saw its profits surge, topping expectations, helped by strong sales of its skincare and makeup products. The company saw revenue growth across geographic regions, which includes the U.S., Australia, China, and Japan. Investors shrugged off the company's muted outlook, sending the stock up more than 3% to $67.36. And there was a deal in the semiconductor business. Maxim is buying Volterra for about $600 million. Volterra makes low-voltage power management chipsets for computer and networks. Maxim says the purchase will give it a greater role in the enterprise and communications markets. At the close, Maxim shares were down 3% to $27.76. Volterra up 54% to $22.91. And a deal that may be about to fall apart is sending shares of Onyx Pharmaceuticals lower. According to reports, the widely expected takeover of Onyx by Amgen is now being held up over access to Onyx's cancer drug data. Onyx says it doesn't want to access the data before the study is over because it may slow the approval process. The stock fell 7% to $115.34.
It happens every quarter, regulatory filings from Wall Street's biggest hedge funds and investment firms. They're called 13Fs. Most of them came out late yesterday. They give a glimpse into the buying and selling strategies of some of Wall Street's biggest money managers. Today, we learned that Warren Buffett's Berkshire Hathaway has soured on some food stocks, selling nearly all the company's holdings in Kraft and its offshoot Mondelez, while stocking up on General Motors. George Soros sold off millions of shares of U.S. Airways, a good move considering the Justice Department's lawsuit this week to stop the carrier from merging with American Airlines. Dan Loeb's hedge fund, Third Point, sold out of auto parts maker Delphi in favor of shares of high-end jeweler Tiffany. And then there's Leon Cooperman's Omega Advisors unloaded most of its Facebook shares.
Well, those regulatory filings are one way investors learn what Wall Street's big dogs are doing, but increasingly another way is via Facebook and especially Twitter. On Tuesday, Apple shares shot up 5% after billionaire investor Carl Icahn tweeted that he has a large stake in the iPhone maker. Now, the freedom to tweet is rapidly becoming a game changer in the business world. But as Julia Borston tells us, with that freedom comes risk for investors.
Twitter, which has quickly become the world's breaking news feed, is now shaking up the business of Wall Street and investing, as traders and high-profile investors take to Twitter to talk stocks, sometimes moving markets. Carl Icahn stating in an SEC filing that he might use Twitter to release material information before taking to the communications tool to tweet his position in Apple, sending the stock soaring.
Twitter is a new player in the financial markets. There's no way around this. It's now being fed into the algorithms of the high-frequency traders who, of course, dominate trading volume now.
In April, the SEC said it's okay for companies to release information on Twitter and Facebook as long as they warn investors where to look. Weighing in after Netflix CEO Reed Hastings announced on his Facebook page that Netflix's monthly online viewing topped 1 billion hours. Now that tweets have the power to yield billion-dollar stock swings, the question is, what does that mean for the security of investors' Twitter accounts? A number of high-profile Twitter accounts have been hacked, from Burger King and Jeep to the Associated Press. The passwords weren't strong enough, prompting Twitter to introduce an optional additional step to access an account. But still, it's far from hack-proof.
It's obviously going to be very tempting for someone to potentially hack into or try to hack into an Icon type account, because the significance of an Icon player with someone with his resources, his track record, obviously there are a handful of people like that, or institutions that can move markets with just a few bits of information.
Or what about Twitter typos? Wall Street investors used to worry about a fat finger trade. Now the concern is that a slip of the thumb will send the markets into a tizzy. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Well, it's not just new media that you have to worry about. The Washington Post revealed that its website was hacked today, and a group that supports Syrian President Bashar Assad is claiming responsibility. This morning's cyber attack only lasted about half an hour, but surprised some readers logging into the Post webpage. They were redirected to the Syrian Electronic Army site.
Coming up, a number that might frighten all parents. We'll tell you what it costs to raise a child, and the figure doesn't include college tuition. But first, a look at some of the most active stocks today on the New York Stock Exchange. A judge in California Superior Court ruled that the Golden State can move forward with its lawsuit against the ratings agency S&P. California's Attorney General is suing S&P on behalf of its two largest public employee pension funds. The case hinges on the sweet credit ratings S&P assigned to certain mortgage-backed securities, paper that later turned terribly sour. S&P says it'll vigorously defend its actions.
Another possible setback for the planned merger of American Airlines and U.S. Airways, just days after the Justice Department filed a lawsuit to stop it. Today, a bankruptcy judge asked American's parent company, AMR, to explain why he should approve the company's merger and exit bankruptcy protection while the federal government is challenging those very plans. The judge expressed, quote, lingering doubts about okaying the merger, which that lawsuit says will raise airfares and fees and limit choices for travelers. Although no decision was handed down today, American Airlines says it'll challenge the government's lawsuit, continue planning for the proposed merger, and be back in bankruptcy court for a hearing on August 29th.
Apple's online retail store and its gadgets are some of the most popular in the world. They're also some of the most frequently counterfeited devices. But in China, where most of those counterfeit goods are manufactured, consumers in the growing middle class there may have had enough. They're now fighting back to stop the sale of those bogus goods. Eunice Yoon has the story.
Wang Hai is a crusader for the Chinese consumer. He shrouds his identity. One way this investigator can track counterfeiters.
Oh, fake Crocs.
After sniffing out fakes for nearly 2 decades, he finally feels consumers here are backing him up in the fight. People have a stronger sense to protect their rights against counterfeits, he says. China has long been the land of the fakes, famous for everything from bogus luxury handbags and watches to gadgets. But recent health scares involving food and iPhone knockoffs are making consumers here think twice.
I don't think buying counterfeits should be the norm of our lives. We should boycott them.
I don't trust the quality, and they are harmful to the genuine products.
Counterfeits have harmed international businesses for decades, with hundreds of billions of dollars in estimated losses every year. Beijing says it's clamping down on violators, but to many companies, progress has been slow. This Swiss wine importer opened shops here more than 2 years ago. She's already dealt with one copycat and is pursuing another.
So they copied our store twice already, from the price concept, from the wine descriptions, from the wine sometimes even, and even the uniform of our staff, everything is copied.
Investigator Wang says the situation will only improve if consumers are allowed to move from complaining to advocating the government enforce the law. Otherwise, China will only be known for cheap, low quality, and unreliable products, he says. a reputation China wants to change. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And finally tonight, if you thought raising a child was getting more and more expensive, well, you're actually right. It'll cost parents almost $250,000 to raise a baby born in 2012 and until they turn 18. If you send them to college, you could spend twice as much. And if one parent opts to stay home to raise the kids, that's also a cost. A new study from the Department of Agriculture says expenses are highest in the Northeast and lowest in southern cities and rural areas of the country. And not surprisingly, it says the biggest increases in spending are due to the skyrocketing costs for housing and health care, but really worth it all.
It's worth it all. I'm sending my son Mackie a bill, though, when he gets to be 18. Here's your bill. Remember to send us the one stock you'd like our Market Monitor guest to discuss tomorrow. Log on to our website, nbr.com. We're still taking nominees. Click on the link to submit your question, and don't forget to include where you're from.
And that's Nightly Business Report for tonight. I'm Susie Guerra. Thanks for watching.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow night.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Guerra with a Nightly Business Report news brief. A big stock sell-off on Wall Street today on troubling earnings and forecasts from economic bellwethers Cisco and Wal-Mart. Worries about the outlook for business and consumer spending outweighed some encouraging economic news. In the job market, jobless claims fell sharply. In housing, foreclosures hit a 6-year low in July, and home builder confidence for August is now at an 8-year high. But investors shrugged it off. The Dow tumbled 225 points, its biggest loss in 2 months. The Nasdaq down 63, the S&P lost 24 points. And a new study says it'll cost parents almost $250,000 to raise a baby born in 2012 and until they turn 18. If you send them to college, you could spend twice as much. Be sure to tune into Nightly Business Report right here on your public television station.